Why do you keep failing? Why are you not successful yet? How far are you away from success, from trading success? Now, I can assure you that deep down, you already know the reason why you're not successful yet. But many people have never put it into words, never tried to put it into words on the reasons. Now, I'm going to give you the by far three deadly reasons, and that is over leveraging, over trading, and over holding these trades. And often people ignore the importance of psychology and give little credit to its importance. Let's do an experiment, shall we? You pull up a trading chart and you entered 100 trades blindly, with maybe a 1-to-1 risk reward ratio for every single trade. And surprisingly, the results are either break even, small loss, or small profit. Now, if that is the case, then why on earth do people liquidate their account? I am talking about blindly taking and entering trades. I'm not saying that you're going to structure them with fair value gaps and, well, a lot of, how do I say this? A lot of indicators on your charts. You're simply going to enter 100 trades blindly. You're just going to open up the chart and take a shot. 1-to-1 risk reward ratio. At the end of the 100 trade, you're going to find yourself either break even, small loss, or small win. It's very, very unlikely or almost impossible for you to liquidate your account. Why? Because 1-to-1 risk reward ratio makes it 50-50. It's a game of 50-50, and therefore you're not going to liquidate your account. It's going to be very unlikely. Okay, let's start with the first thing, over leveraging. Now, over leveraging or overdoing your margin is by far the leading cause of failure in trading. It's like when you're supposed to use 10 leverage, but instead you use 15 leverage. This is supposed to be very clear to everyone, but including me, I will sometimes make this mistake, and it's inevitable. No matter how professional you are, you're going to occasionally, as in once every few months or once a month, where you're going to make mistakes where you're going to over leverage. Maybe you overestimate your abilities. Maybe you think you're better. You enter a trade, you get humbled, and then you go back to the normal trading. And the cycle begins again when you're suddenly making a multiple wins and you're going to be a bit more confident and you're going to make the same mistake again. And then you're gonna either liquidate the trade or just lose a little small stop loss if you have a good risk management. If not, you're going to liquidate the account. And I assure you, most people have liquidated accounts. There's no shame in that. Okay, I have liquidated many accounts. There's nothing to be shameful of that. 99% or more actually liquidate their account. Okay, if they're a beginner, they're going to liquidate their account. It's going to be normal. It's part of the process. There's no need to be ashamed. And why do we still over leverage? We know it's wrong, but we still tell ourselves, we somehow convince ourselves that, yeah, it's going to be different this time, or we tell ourselves that the results are going to be different, it's going to be better, I'm more confident in this trade, but the results always say otherwise. And I cannot give you an exact amount on the leverage or the margin you're going to use because everyone has a different trading style. If you're a scalper, let's say it depends on the type of asset you're trading. If you're trading Bitcoin, you're going to need a much more lower leverage. And if you're trading Forex, you're going to need a much more higher leverage. And it also depends on your margin. A misconception people make is that over leverage or high leverage means not good. But then the truth is different. What is the difference between a person that uses $1 and 100 leverage and a person that uses $100 and one leverage? No, there is no difference between that. In terms of trading fees, it's exactly the same thing. Okay, so whether you use 100x leverage or 1x leverage, it all depends on your margin. So it depends on what type of asset you're trading and what type of margin you're using. And after you have decided these two factors, only then can you decide what leverage you're going to use. For example, if I'm going to trade with $100 account, if I'm scalping, I would stick to $3 to $5, and I would stick to maybe 10 to 20 leverage. Okay, so of course it's going to be fluctuating differently for everyone. You cannot just say, oh, 3 to 5, therefore it's 3 to 5. It's going to be different for everyone. So you cannot really pinpoint an exact figure, because everyone trades differently. Some are swing traders, some are day traders. So you cannot just set a rule. Okay. Okay, the next thing is over trading. Honestly, everybody makes this mistake. Okay, I am no exception. We are all humans after all. However, what separates amateurs from professionals are the frequencies of such mistake. A pro that has traded for a decade, might make this mistake once every few months, or maybe even once only a year. But an amateur will make this mistake almost every single day. Okay, if you're a good trader, if you're a profitable trader, you have made a lot of money. One mistake is not going to cost you your entire career. But if you're an amateur in the first place, then you already make a lot of mistakes. Making more mistakes is going to hurt you substantially. So that's one thing you have to differentiate. You cannot say, "Oh, professionals make this mistake too. So why can't I make this mistake?" The difference is they make a lot of money. Making one small mistake is not going to cost them the entire account. So this is one thing. A general advice is, if you're a scalper, stick to 1 to 3 trades a day tops. Don't go over three. I assure you, you don't want that. It's not going to end well for you. And day traders should stick to 1 to 2 trades a day. Now, if you don't know what a scalper is someone that gets in and out very quickly. Sometimes the trade lasts for only a few minutes, seconds, or minutes, or even hours. But then I would not suggest doing that, because, especially seconds, because if you're scalping within seconds, the problem you're going to face is that you're going to pay a lot of commission, especially if your trade holding time is very low. So that's going to be something that you have to consider. Okay. And day traders should stick to 1 to 2 trades every day, every day to 2 days. You should not be trading 10 trades a day, be it your scalper or your day trader. There's no good in that, and it's not going to end well. And people often think they can be profitable with one trade. They say, if I can make $10 in one trade, why not triple it and quadruple it? Why not take 3 trades, 4 trades, so I can make $40 instead? Why shouldn't I just speed up the process instead of taking one trade? Why not double it and triple it? Okay, but then here's an example. Here's a metaphor here. If you can work 8 hours a day and you make $100 a day by working 8 hours, why not work 24 hours a day? Well, duh, you can't do that. Duh. Both your physical and mental state needs rest. You can't just say, okay, if I can make $8, okay, if I can make $100 in 8 hours, why not make $300 in a day? Well, you can. You need rest. And trading is exactly the same thing. People often say if they don't trade up to a certain hour in a day, they feel incomplete. They feel unsatisfied. They feel this sort of emptiness. Like I don't feel right. I only took a few minutes to trade. I only took a few minutes a day to take one trade. And it might not feel good. It might not feel satisfied. You want to take a few more. And like I said, stick to the general advice. Don't take more than 10 trades a day. Don't take more than 1 to 3 trades if you're a scalper, and don't take more than 1 to 2 trades if you're a day trader. Don't go five, don't go 10, don't do it. And it is scientifically proven that overtrading will only degenerate your trade qualities. Sorry, degrade your trade qualities. So if you don't believe me, you can try this, but maybe not try it with the real account if you want to spare yourself with some money. You can go to your paper trading, or you can use a very small margin that you can afford to lose. And you're going to take 2 examples. Spend 1 week and taking one trade a day, and 1 trade a day, maybe you might take 5 to 7 trades a day, if you're a day trader. And let's see how much you make on that week. The second week, you do the same thing, but you increase the trade frequencies. You're going to take up to 10 trades, 5 to 10 trades a day. You do it for a week. And I'm sure the results are either the week one, which is you're going to trade 1 trade per day, is probably going to end up with a small loss, a small win, or even a big profit, to be honest with you. Okay? If you take 10 trades, your results are either liquidating the account, which is something that you can afford if you're like putting like $5, you're liquidating $5 essentially, or you're going to experience maybe a small loss, which is very unlikely because taking many trades means a lot of commission. Break even is almost unlikely, and profit is almost impossible. Okay, when you're over trading, you're degrading your quality for every single trade. Even professionals avoid doing this because they know they can handle the type of dedication that is required in every trade. Every single trade you keep taking on, your focus loses its ability. You kind of just get more and more lazy and tired to take another trade. If you keep doing it, you're not going to get the results you want. And this is just a fact. People have traded long time, and they will keep telling you this advice. But people don't understand that. They're just gonna keep making that dumb analogy or the dumb concept of, if I can make 8 hours a day, if I can make $100 in 8 hours, why not do it 24 hours? You know, so instead, I want you to imagine yourself like a calm-headed scalper. Like on a mountain, you're like a scout. You're like a sniper on the mountain, and you're waiting for your trade to set to appear, and you're just gonna aim for it, you know, and then the day's done. If you found one good trade, the day's done. If you found two good trades, the day's done. Don't say, oh, I found two trades, so therefore there might be more trades. That's a logical fallacy. Just because you found two doesn't mean there's four and five and six. Okay, and even if there is, you shouldn't be trading it. Honestly, I'll be honest with you. If you're a rulist, 1 to 2 trades a day, stick to it. Don't go over 1 to 2 trades. Okay, if you took two trades, that's it. Close the chart. Go do exercises, or play a game, or relax, or do something else. There's a lot more than to trade every day. People feel unfulfilled when they don't trade for 8 hours a day, and that's the problem. Trading is not, it's not your regular 9 to 5 job. You cannot be sitting in front of a chart for 8 hours a day. It's not going to work. But surprisingly enough, a lot of people do it. Even though they're trying to escape 9 to 5, they're apparently sitting 9 to 5 in the charts. So that's a bit of a stupid thing to do. So if the day is done, why must you stress yourself with taking more trades? Okay. The next reason, overholding, or aka overextending trade time. So if you're on average, and I'm not sure if you have have you analyzed your trade before? If you have journaled your trade, if you have analyzed your trade, I'm sure you know exactly how long your average hold time is. Most scalpers have an average hold time of 4 to 5 hours. That's at least for me. If you are a day trader, you have an average hold time of maybe 24 to 48 hours, around there. And let's be honest, rules are dead and markets are live. You cannot just follow the rules dead, like just dead ass following it. We have to adapt, and it is okay to occasionally allow scalp trades to go over 24 hours, but you shouldn't be holding it for too long. You want to keep, ideally, you want to keep your scalp trades within 24 hours, but if you go over 24 hours, let's say you do 28 hours, it's okay. It's not the end of the world, okay? But don't do it often, and don't hold it for 40 hours, 80 hours. That's not the way to do it, okay? For day traders, you should stick to an average hold time of 1 to 3 days. You shouldn't be saying, I should take it for 1 week. I find that the trade is very good. I feel like there's hope for this trade, and I'm gonna hold it longer. And we both know what happens after that. You're going to lose the trade. Okay? And this is not to say that you cannot exit your trade a little earlier or a little later. It's just you need to be disciplined enough to stop yourself when you overextend a trade, when you clearly know it shouldn't be. If you know that trade, you have set a take profit of 1 to 2 risk reward ratio, and it's 1 to 4 already, and you're still not exiting the trade. And that is an example of an overtrading phenomenon. For example, you're taking a $1 take profit point, but you think it is going to be a good trade, so you keep holding it for days and weeks even. Eventually, the market reverses and it actually hits your break even, or you hit a stop loss. This is when revenge cycle begins. The second you went from a win to a loss, you're going to be very pissed with this result, and you're going to overtrade. Okay, overextending leads to overtrading. Overtrading leads to over leveraging. All these three things are connected, and it's not going to end well for you. Okay, so this is the three reasons. These are the dead three reasons, the deadly three reasons. It's going to poison your entire trading career. Okay, so final thing is some tips and tricks. Now, finally, what is the solution to all of this? Well, the first thing is to understand the logic. You have to sit down one day in front of your charts or anything like that. Sit down on your bed and you want to question yourself, why do you overtrade? Why do you overhold your trades? You'll have to come to a logical conclusion that this is irrational and illogical. Okay? You have to come to these kind of conclusions where you can actually convince yourself. If you're just going to watch this video, it's not going to get you far. Taking the action is what is going to make the difference between a normal viewer and an action-based viewer. Okay, and the next thing is something I would recommend is using a journal. A journal could look like this in this chart. You can use a format like this where you note down what type of asset you're trading. Are you trading forex? Are you trading Bitcoin? What is the big? If you're trading Bitcoin, for example, you can write BTC/USDT. Okay, and what was your average hold time? How long did you hold it? Okay, how much margin did you put in? How much leverage did you use? What was the reason you took the trade? Now, I know some traders tend to be a bit lazy. They don't want to write down the reason for every single trade they take. If you are a bit more hardworking, you should do it. But if you're a bit lazy and you want to get your way around it, but still maintaining the effectiveness of journaling, is you can use symbols. For example, when you write one triangle, it means this is probably a structure trait. If I draw a circle, it means order block. If I draw a rectangle, it's smart money concepts. So you can write the reason as you can add, say, for example, I took BTC trade. I hold it for 4 hours. I held it for 4 hours. It was a win trade, and I took it because four triangles, two rectangles, and one circle. For example, it's like, oh, it's a very good structure trade. It's a little bit of an order block. It's a little bit of this and that. It's like a mixture of different reasons. It's impossible to take one trade based on one theory, and it's not good if you do it. Let's say you learned about order blocks and you only take a trade because of order block. That's an unhealthy scenario where you shouldn't be doing that. You should be taking trades with a lot of reasons, not just one reason, not just one theory, one indicator. It's not going to end well. Okay, so this is it for this video. I'm a fairly new creator, so I really appreciate if you share your opinion in the comment section. Let me know if you think the video needs improvement on any part, if you think the video is too fast, too slow, if you think it's a bit complicated. Just let me know in the comments. It really means a lot to me. Your opinion really matters to me. And thank you for watching this video. I hope to see you in the next video.